Welcome to Growing the Future Productions. My name is Dan Aberhart, and thanks so much for joining us for this live today for Liquidity and Legacy. We are having this conversation because if you haven't noticed over the past while, it's become clear that conditions are changing. And after we had that conversation with Robert and Angelic at the beginning of the year, there's been a lot of buzz, and we're seeing those themes showing up in real decisions that are being made on the ground. We had $1 billion of farmland hitting the market, effectively doubling the inventory out there. So things are happening. Today, we're going to talk through that with someone who is intimately involved, who directly deals with this on a day-to-day basis. I think he's well qualified in many ways, shapes, and forms, of which I will tell you more, dear audience. But before I get started, just a few quick housekeeping notes. This session is being recorded, and a replay will be made available afterwards. Please, please, please provide us questions, comments at any point using the chat. I'll moderate it. I'll get that information to our esteemed guests, and we'll have a fruitful conversation here. Oh, somebody put up their hand and put it down quickly. Thought maybe we had a little bit of live interaction there already, but you can put your hand up. I will put you into the call. We can do that. We have the technology, but my guest is graciously offered to answer any and all questions as long as they're productive, respectful, and we're open to debate. But we want to have a grown-up conversation about what is going on. This is an important topic. So before I introduce my guest, I'd like to get a quick sense of where everybody's at and make sure the chat's working. And that means I would love it if you could put your opinion into the chat. Do you think farmland values are going to be going up? Put an up arrow. Do you think farmland values will be staying sideways? Please put a sideways arrow. And if you think they're going to go down, put a down arrow. I want to see it in the chat here. I'm opening up the chat. Can everyone put their messages in the chat? I just want to see it. First comments we're getting here is up, but at a much slower rate. Up, down, up, up. Come on, everybody. You can do it. Up, down. All right. We get the idea. I just want to make sure everybody can put their questions and comments into the chat, so we're good there. So, well, let's get to it. I have a really great guest on the call today. I am joined by Ted Cawkwell. He is a fourth-generation farmer on both sides of his family. Did you know that? Did you know that about him, or just know him as a top realtor? Because Ted has been around the farming game all of his life. It's not just something that he does from a distance. It's in his blood. He's farmed full-time for years, and he's still actively farming today through joint ventures. And alongside that, Ted has built and operated multiple businesses over the years. He's a serial entrepreneur. He has owned and ran companies both inside and outside of ag, including tourist operations and consulting work. And we were just talking about his coaching. So you might know Ted as one of the top farmland real estate folks out there within the RE/MAX system. He is number one farmland realtors. That's quite an accomplishment, and it would be indicative of how he serves his clientele. It's all about serving the clients. So what's important to understand, and he's not looking at this market from a theory or headlines point of view. He's involved deal by deal, conversation by conversation, working closely with families as they think through what's next with them with farmland decisions. So he's also candid about what he's doing himself. He's going to share with you what he's been doing on his own farm today. It's not just a theory for him, so that's going to be really good. So thanks for joining us today, Ted.
Yeah, thanks for having me, Dan.
It's going to be great. It's going to be great. Good morning, Michael Muscovy. So yeah, put your questions into the chat. Put your chat into the chat. My first question today, Ted, we were discussing last week. You were very candid and off the cuff, and you went on to the internet and on social media, and you shared with folks what was on your heart or what you were seeing in the industry. And of course, there was a lot of chatter back and forth about, the response, I guess we could say, positive and negative. But let's clear up, why did you feel compelled to share what you did? What has changed in the last couple of weeks? And what do you want folks out there to really understand about this situation?
Yeah, really when I put the video out, it was just another video. I actually dropped the camera at the end and had to edit that out. I just threw it up and did a little market spiel. I do often. Um, I got a bit more of a reaction out of it though, because for the past 14 years, I've been saying, hey, you know, farmland values are going up, farmland values are going up, farmland values are going up. And it was kind of crickets. No one ever said anything. And then on that video, I said, it appears that things are coming to a halt here. They're going to either appreciate slower or flat, or they might even, drop. And that got a lot of attention.
Yeah.
And so the intentionality was simply just to keep people advised on what I'm seeing through my work, right? And what I saw in my office in the past couple of weeks might not be what everyone's seeing in theirs. But for the first time in my career, I was seeing offers that were substantially lower than not only list price, but substantially lower than where the highs had been. And then those offers were getting accepted. So to me, that signifies some type of shift in the market. And it wasn't one, it wasn't two, it was three offers in 1 week. And I've never seen anything like that in over 14 years of real estate. So to get three of them, that were close to 30% under the peak of the market, I just thought, well, hey, there's a bit of a shift happening here. And that's not to say the market values dropped 30%, but in these particular cases, they did.
Yeah, I'm sure it's regional, and there's unique circumstances around each, and yet there will be a macro trend, and it will be the big picture, and sentiment has shifted. But if you could take us back, you said you've been selling farmland 15 years, and you've been farming all your life. Can you paint a bit of a picture of your experience of what has happened to get us here to date with farmland values?
Yeah, well, I'll talk about the last 14 plus years since I've been a realtor because that's where I really had my finger on the pulse of it.
Yeah.
When you're farming, you're watching your little area where you farm and you're only really paying attention when you're buying or selling. Now I have more of a daily perspective and a provincial perspective. So over the past 14 plus years that I've been a realtor, farmland values have been on this, I would call it a rocket ride, really. I think farmland values have risen more sharply than people had anticipated and for a longer period of time than people anticipated. And, you even look at FCC, what was that, 4 years ago, 5 years ago? They're like soft landing, soft landing. Like, and it just kept going and going and going.
Right.
Right. And so, all of us are guessing where it's going to go, and none of us know that. But my history it's been like this, right? And it's like, uh, and it does appear that it's now things are tabling off, but it's just been a one-way trajectory for a very, very long time. And I think we all got used to that.
Yeah, it makes me think of Elon Musk's SpaceX there when he lands the rocket backwards when you're talking about a soft landing. Because I think one of the unique things you said, not many folks really know or anticipated the actual trajectory. And I think that's indicative of it's never really been charted before, or you had a sense of maybe it was going up and you hear these percentage, but it's almost not, it was maybe abstract or ethereal of what was actually going on. But when we look over the last 15 years, I mean, it's been a crazy bull market. And even before that, but it's really accelerated or picked up steam in the last few years, probably since I'd say maybe COVID too. Hey, like it seemed to be a real acceleration.
Yeah, it was just a really, really wild ride. And, it's in my personal opinion, that's not normal. Like I don't think that we would have a bull market like that again anytime soon. I'm very bullish on farmland values long term, but to see something like that again it would surprise me. I'm not saying it can't happen. Of course it can happen, but it would surprise me if it happened like that anytime soon again.
Well, we're going to get to a little bit more detail about what you're seeing and then what you've done to give some perspective on the situation. But we got a question here from Romeo Prescott. He's wondering about farms and blockchain. I'm not sure the context of that, but do you see blockchain and farms? I know there was one individual who's trying to give folks a piece of the farmland ownership that maybe it wasn't attainable if you're just your average investor trying to, make your RSP hum for you and using blockchain technology to buy pieces of land. But do you have a perspective on that, Ted?
I don't actually. I'm gonna leave that one alone because I don't know anything about it. So I'm not gonna wade in and pretend that I do.
Oh man, I thought you were going to launch FarmCoin on the call or something. I could be like a part shareholder in FarmCoin, and then we could go on the internet and say, "You missed the webinar. We launched FarmCoin, and we're all getting rich here with some sort of crypto." But Romeo, if you have more perspective on that, you can share more about what you're looking for. But Ted has gracefully stepped aside from trying to pontificate on something of which he knows nothing. So I appreciate that. Georgina, what do you see the farmland aggregators doing? The farmland aggregators. What do you see them doing, Ted?
So define aggregator.
Can we get a little bit more context on that farmland aggregators? I take it that maybe you're referring to folks like Robert or investor groups. Investor groups. How do the investor groups play into this, Ted?
Well, in Saskatchewan, 98% of the land is owned by farmers, and 2% is owned by investors or non-farmers. Those investor groups are not all the same. So there's the big guys, they have offices in Calgary or Toronto, and they bring funds in from people that want to invest in farmland, but maybe don't have the expertise or maybe don't have enough to buy a whole quarter, and then they invest. And so there's some of those. Most of the people though are just mom and pops, like dad works at the Chevy dealership and mom's a school teacher, and they just don't want to have all their money in RRSPs, so they want to buy a quarter of land or maybe 2 quarters of land. So, we do have some of that money in the province. It's about 2% of the land. And, you know, they're really not in the market very aggressively right now, because they're having trouble getting capital to invest in this, and interest rates, although low, are still a little high to make this work. They're typically getting like a 3% cap rate, 2.5, 3% return. And so when you're borrowing money at 4% and you're getting a 3%, you're speculating on appreciation. And so I would say the investor buyers were a lot more active up till about probably 2023 or 4 when interest rates started rising, but they're all pretty quiet right now.
So when you talk about what's causing farmland values to go up or down, with investor groups being 2% of the market, it feels like maybe they have a bigger influence than they do. What do you think are the drivers of farmland values and sentiment as you see, as you've experienced it as a realtor?
Yeah, it's simple. It's just profitability at the farm gate. 2% of the market isn't going to move the market substantially. But it's just profitability, right? When farms are profitable, farmland values go up. And when farms are not profitable, then they're flat or down. And it really is that simple. And, I can see it and track it pretty easily on my side of things. And as we all know right now, margins have been squeezed. And so I think most people are expecting that farmland values will taper because of that.
Yeah. We're getting some more chatter here from Romeo saying the farms and blockchain, it's a future production X tokens. X tokens allow investors to purchase production units with a daily yield of 6 to 7%. Securities on percentage production. Land value is tied to commodity prices, which is happening now. I'm not sure where that's at, if that's been invented or if it's available for folks on the call today, or if that's just something folks are dreaming about. But Ted, are you familiar with that concept any
No,
further?
never heard of it. I'm just a simple farm boy helping farm families buy and sell land, nothing on the blockchain.
You're not launching a FarmX on the call today.
I'm not.
You're not. Um, so with cash flow, then where is that what's starting to show up in farmland values, or what you've experienced in the last couple of weeks, which you didn't see before? Is it people doing their budgets, taking a look, getting a feel, and realizing, hey, we're in a different zip code here? Is it conversations with the bankers? What do you think's happening there?
Yeah, to be fully transparent, people don't give me all of the nuances of why. Sometimes they do, most of the time they don't, and sometimes I can kind of read between the lines a little bit. So, um, I've been getting I have a few listings right now where people are saying, we don't really want to sell all our farm. We want to keep farming, but we're just going to sell off some fringe stuff and clean up the balance sheet. Or we just want to get in a stronger cash position. And so I'm seeing some of that start. I'm seeing people saying, I'd like to sell some land, but I'd like to rent it back. You know, do you know anyone that is like our a person that just commented, an investor that would buy this land and rent it back to me because I want to keep my acres up. I had one guy talk to me about, my lender basically told me that I should be, selling off some of this land and cleaning up my balance sheets. So all of these things are starting to happen. These are things that I've never seen before in my 14-year tenure as a realtor, but they all started here the last couple months. So the shift is happening from the conversations that I'm having with farmers.
Yeah, apparently this X token thing is launching September 26th. Don't sell your land, sell the production capacity, keep the assets. But that's probably a different conversation for another day, Romeo. I think we're going to stick with what Ted and I are focused on conversationally here. And I'm wondering a little bit, Ted, you had been talking about this for a while as a strategy, and maybe there's different reasons that you would divest of some land. You recently done it yourself to shore up your position. Would you mind telling folks about the strategy you've been espousing for a while? Maybe share what you did personally as an investor and a farmer with your own land.
Yeah, I mean, I look at my I guess first and foremost, my farmland is, the biggest part of my personal portfolio because I love it. Like it's in my blood. I used to farm full time and now I'm not boots on the ground, but I just I love farming. I love owning land and yeah, nothing gives me a bigger thrill. But I do look at it very analytically, and I always have when I was boots on the ground and now. So, I've recently sold about 16% of my land base, and just because it made sense. It was the last land I bought, so I didn't have a lot of equity in it. I was cash negative on it, and so by selling it, I improved my debt to equity ratio and improved my cash flow because I was cash flow negative on it. So there was no financial reason that made sense for me to keep that. And so it made sense to keep all my other land because I bought it earlier and it's cash flowing really well and it works out great. So I think um, yeah, just looking at this through a financial lens rather than an emotional lens, I think can really be beneficial to producers out there and doing what I did. I guess one of the other reasons I sold that 16 or 17% was I the only reason it made sense to own that was because of appreciation, because it was the last stuff I bought. And I just don't believe that we're going to have appreciation like we've had recently in the next short term.
Yeah.
Long term, I'm bullish. So yeah, so I sold it. Just like last week I sold some silver, and this morning I bought some silver, and it's no different with land. If land prices drop, I will certainly buy more again. It just didn't make sense for me and my farm.
Can we talk a little bit more about that? Just because I'm really fascinated with the whole thing that's going on in commodities and the fact that you were playing in that market. We've seen one of the biggest moves in financial history. It was like half of the GDP of the U.S. was wiped off the map in a pretty much an afternoon with metals, and obviously there's some big players involved with that. Let's say, and lots of
Mhm.
retailers that probably retail investors that likely bought at the top, but. Silver's so interesting because it is an asset that everybody sort of can relate to. A lot of it's paper held, right? It's not like you're talking about physically owning the asset, but there's lots of derivatives. But farmland isn't quite the same because we don't see it. It hasn't been charted. And talking with my buddy Trent Clarenbach, he said that he's the first person that he knows of that's physically charted farmland values, and I believe he did it in his report for Iowa. Um, it's kind of the same beast, isn't it? It can go up and down. It's just that it's not quite as visual or visceral as something like silver, which is charted, and we can see the big red candle on the charts, eh?
Yeah, I 100% agree. So I think farmland values are moving up and down all the time, right? And unlike silver, where we can just look on the app on our phone and go, oh, it's up 2.05% today, and yesterday it was down 1.7%, we
Right.
can't do that with farmland. So, we can look on MLS and we can look at solds, we can look at the Farmland Security Board documents and see the past solds, but the Farmland Security Board publishes once a week. We probably need a couple, 2, 3 months to even start to see a pattern. So it's really, we all are excited for the FCC Farmland Values Report that comes out, right? Well, we get an interim in 6 months and then a full one at the end of the year. So it's really hard to track it. We can't track it in real time. And so I think there's a bit of a lag really there just because we don't have anything like that. And how great would it be if we did have a tool like that where we could watch it?
Well, and it probably speaks to the psychology because the irrational exuberance can continue long without getting the actual signals. If it's like literally a 6 months chart that's just showing you what has happened, makes it harder to know. And if you're not in touch with the market like you are every day, it's
Hmm.
we're getting coffee shop chatter. That's what's guiding it right now. Dean, you had your hand up, Dean Klippenstein. I will get you on there if you're willing to come on, but I wanted to get a few of the other comments in the chat here. So Georgina is saying, in your perfect world and given compressed farm margins and interest rates likely sneaking upwards while banks are tightening their capital, what could help the next generation get into farming?
Whew. It-
Okay,
wow.
I need your magic wand here, man, and just whip it out, wave it around, and
Yeah.
go.
Well, geez, I wish I was so brilliant that I knew the answer to that because
Counting on you, Ted.
wow, that's a tough one. I mean, we know how important it is to keep the younger generation in farming. That's our lifeblood, right? And so that is super, super important. I mean, to be honest, I think there's more opportunities for them today than there was even a few months ago, right? Like when farmland values are coming off that crazy ride, it'll make it a little bit easier for them. I mean, I started a farm from scratch 10 years ago, literally from scratch. I partnered with two other guys and we all had off-farm jobs and we knew we couldn't do it together. So I guess speaking from my experience, everyone says it can't be done, but we did it. And it took a lot of determination and grit and hard work and creativity through our joint venture agreement. And so, I think just being creative and creating, yeah, and just working another job to feed yourself like we all did and hopefully getting some good mentoring or coaching from someone older that is a keeper of the wisdom is something I would always suggest. And and start small and just yeah, lean into it as you can.
I would totally agree. If you love to farm and want to do it no matter what, which is what any farmer should do, because
Yeah.
it's not an easy business, you might have to work like many did, including my father, 15 years at the mine, 5 years in crop insurance, 7 years at the John Deere dealership. And it wasn't until my brother begged and pleaded and more or less forced him, God bless him. It's on the call today. Turning 75, by the way, this month in Arizona. We're going to be down on the 21st celebrating. I'm told I have to pull out the guitar and sing a little bit of Waylon Jennings. Probably cost you a little bit there, Harvey. But yeah, I grew up with a dad who didn't just farm. He worked off the farm the whole time. So there's that option. Many went out and got their fame and fortune and other things and came home and bought farmland. The other opportunity I would say is Aberhart Farms is looking for a farm manager right now. And with my brother, with the CEO mentality, the abundance mentality, if you get in with a farm family or company that's working in today's world, there is so much opportunity for you to take the bull by the horns and become part of that operation, rise through the ranks, become a leader, farm, or simply work on the farm and what you're best at. When I grew up at the farm, you had to do everything, Ted. You had to be a jack of all trades. And in today's world, on some of the operations, you can afford to be a specialist. Maybe, you like operating equipment. Maybe you're a mechanic. Maybe you're into the drainage side of things. Maybe you're into precision ag, into the data. There's all kinds of opportunities. So I believe we live in a world of abundance. Anybody who's ambitious and forward thinking can get coached by Ted Cawkwell in mindset and go out and start farming, in my humble opinion. Kent Erickson is saying, with ag data collection getting so common and available, what do you think is a range or average across Western Canada on ROI or margin?
Well, so I only work within Saskatchewan, so I really don't spend. I'm ultra specialized, so I don't look outside of the province. And that's one thing that is so different from farm to farm, right? Like it's just that's the amazing thing about farming. Like, is he talking about farming or invest in like renting land back?
I think what he's referring to, and Kent, can you elaborate for us? Maybe I'll try and bring him onto the call here. Kent, I don't think
It's
Kent's online.
farm to farm, it's radically different, right? Do you have 20
Kent,
year
did
old?
you want to, can you share with us what you're thinking there, Kent, a little bit more, please?
Yeah, just more thinking on return on the business. On average, we have, so much good online data now of margins. And you talked about margins earlier in the call, just as margins tighter. Well, what do you mean by that? Are we at, 3%, 5%, 0.5%? Where are we, do you think, in Saskatchewan? I'll pick on the average.
Once again, I'm gonna on the questions that I don't know the answer to, I'm just gonna be honest that I don't know the answer to it. I mean,
Yeah.
I do know like on our farm, at the peak of the peak, right? The $25 canola year that we had a few years ago, our margins were, man, they were crazy, right? Like we were growing 900 to $1,000 gross per acre and probably had 400 plus net. And I think that 400 has maybe been squeezed down to, 60, 70, 80, depending where you're farming and how you're farming. So, it's shrunk exponentially. And every farm's so different. It's impossible. Like, do you
Yeah.
build $1 million shop? Do you have all new machinery? Do you have 10-year-old machinery? Are you a starting farm? Are you a fourth generation farm? So it's radically different from producer to producer.
Yeah, and I think some folks that could really answer that would be, in my humble opinion, someone like Global Agri Solutions
Yeah.
on the macro, because they go in and that's part of what they do is they assess where you are as far as being in whatever percentile, top or bottom or middle percentile and farm margins relative to your geography. I would love to know what everybody is experiencing themselves. Kent, what are you experiencing as far as farm margins go? And you're in Alberta there, central north Alberta, right?
Yeah. Yeah, I'm in East Central Alberta. I think if you're a farm that has, a limited rotation of wheat and canola, and maybe a few other little things, but out here right now with, wheat in that 725 to 775 and canola is not terrible now. It's kind of creeped back up, but when you look at a whole farm, I think with if you're in that new equipment rotation or, less than 5 years, most farms probably have continued payments on new iron, which doesn't go down nearly like it did, like the commodities went down. So I think with what it costs for, if you have a family or anything like that, I think margins at the end of the day are quite tight, in my opinion. And I just, it's just would be interesting to know, kind of where the range is, because that with interest rates can really play quite a bit on that tight margin.
Yeah, thanks for that. I appreciate that. And yeah, certainly, I'm sure on the home farm there. I don't think Terry's on the call, but I know we have experienced a vast tightening of margins from what it was. But then, to be fair, was it not that thanks, Ken. If you have any more questions, I'll bring you back on. But I'm just gonna disable talking for now. Let us know, and if anybody else wants to come on, that's great. But there has been a vast tightening. But to be fair, Ted, was it not a historical bull market, the likes of which we've never seen, and probably was a once or twice in a generation thing that's going to take a long time for that bull cycle to come around again? We're back to the normal where, yeah, there is very little excess cash and margin in farming on the long term. You have to grind it out for those once in a lifetime opportunities. Is that fair?
I mean, I think so. I mean, I only have the perspective of my life, right? And so, I put my first crop in 1996, and back then everybody had off-farm jobs, right? Like I sold seed
Exactly.
in winter. I had a custom application business, spraying fields for other farmers. Like I did all kinds of stuff. I had friends that were going to work in the oil rigs in winter, and nobody had new half tons. No one built new shops. We piled grain on the ground and in rings because we couldn't afford grain storage. No one went on winter holidays, for example. And the land wasn't appreciating either. So we were making all of our money off of the crops we were growing. And so, I have a different perspective than someone younger and a different perspective than someone older because that's how I started farming. So when I look at the last while, I'm like, this is great, and I think we are back to probably I'm not sure if maybe it's below long-term averages. It is pretty tight margins right now, but the sky isn't falling. Like I think most good producers can still carve out a small profit. And when I started farming the first several years, we were losing money like often. And we didn't have, like you mentioned, GARs, like we didn't have stuff like that. Crop insurance wouldn't cover all our costs. So it's not that bad when you're looking at long-term averages. It's just real bad when you're looking at what we've been living with recently.
It's such an interesting conversation, and I remember a hint of surprise when things changed because I'm on the same train as you. Had a hint of surprise when things changed that the expectation was that you would come home and farm without working off the farm because this just wasn't my experience growing up. And kudos to those that can and get there and have the kind of business that can do that. So um, I wanted to ask you. The common advice is just hold the land and wish I would have bought more, and it's never going to pay in the moment. And when is that bad advice, if ever?
Well, when it doesn't make sense financially, right? Like we were just talking about me selling a little bit of my holdings because it just didn't make sense for me. It was a negative cash flow and increased my level of debt, and there was nothing good there about it. So I think when it doesn't make sense financially, then it doesn't make sense financially. And maybe you've got a real long-term generational plan and you're willing to bite the bullet, so to speak, now for some gains down the road. But I just think we're entering a time where it's probably not going to make sense for everybody to hold all of their land right now. They'll be, and it's going to be great for buyers, people with dry powder. I think there'll be a few more opportunities now. We've had a seller's market forever, just seller's market, seller's market, seller's market. And now if we're in a balanced market, it's about time that the buyers get a little bit of a,
Them poor buyers.
those poor buyers, they've been paying whatever they had to, and now I
Yeah.
think they get a say at the negotiating table for the first time in a long time. And that's not bad. Like we need markets to fluctuate and change. Like the sky's not falling here. It's just
Yeah.
there's change and there's as much opportunity in this as there is downside.
It's so interesting because, yeah, I don't want anyone to perceive this as a bad news or a doom and gloom conversation, because I think there's so much opportunity here. And haven't we been asking forever to have farmland values come down? And in the example of real estate, yeah, we want real estate to keep going up forever, but the boomers have made gobs of money with houses going from 100 to 300 to 500 to 700. My daughter is going to university. She's 25. She doesn't have a lot of hope of cash flowing a new home, like a home of her own. So when we talk about young people getting into agriculture, a dip ain't bad that way. A dip ain't bad that way. And it's creates opportunity for some and not so much for others. But I also think, Ted, there's a lot of folks that expanded maybe far from home with less than productive land, trying to get to make things work on their farm for the machinery, labor, all that good stuff. Some of that might not make as much sense to be going to the unproductive faraway land and having a nice block closer to home that's paid for, that, you can walk to your half ton to get a sandwich or whatever at the end of the day. I don't know. Do you see that coming into play?
Well, I'm getting those calls now, right? And hey, we have a section of land that's a long ways away. Let's just get rid of that now, or let's do this or that. And when the margins are wide and everyone's making lots of money, you don't mind traveling out there for that, or maybe you have some low quality land, but it's still working. And I think in times like this, it sort of gets shaken up a bit. And it's like, we're not going to drive that far for that anymore. We'll get rid of some of that marginal land. And so I think, it changes things up a little bit for people. And rightfully so, I think, because why be taking more risk at a time like this? Like it almost made sense to take some risk when things were really rocking, right? But now I think what I'm hearing from the people that are phoning me is we just want to pull our horns in a little bit and play this safe and protect what we have. And if that means, selling a bit or selling a lot or, buying a lot or whatever the case may be, people are just, I think, a little more risk adverse right now.
Well, we're getting closer to the top of the hour, and if folks, you have any questions, you should be putting it into the chat there. I'm wondering now, what are the practical steps here to assess some of this? We did get a comment here I want to share with you from Barry. We are always in a cycle, and the last decade was too easy. You concur?
Well, it was a lot easier than the prior decades, that's for sure. I do concur.
Yeah, I seen you nodding there emphatically. When we entered into the mindset that land will always pay for itself, and we forgot that production must cash flow payments, when we start to defer capital purchases to make payments, we are in risky territory.
I agree.
Boy, hindsight is 2020, hey?
Yeah.
Whew. Michael Muskby has entered the arena. He's the man in the arena there. I was thinking of Ted Roosevelt style here. I got to scroll down alphabetically. Oh, he goes to the top when he puts his hand up. Oh, Michael, give us some wisdom here. Do you know my friend Michael Muskby, who's going to be at the Convergence?
Not yet.
Good morning, Michael.
You will in a minute, Ted. Hi, Dan.
Morning.
Good question for Ted here, I think.
Okay.
Are you noticing that quality farmland that is efficient for larger operators, that has been managed well, and it is obvious generally by the crops that they grow, and that we're seeing it here that they are remaining strong, but the buyers seem a little pickier to try and find, as opposed to, say, 4 or 5 years ago, just buy dirt and make the improvements. Now, what I think I'm seeing is that they will pay for already improved land. Those that have had the fertility will say, perhaps a little water management or something, those that have had more than just a nitrogen, phosphate, sulfur, but those that are digging into micronutrients and soil amendment products that up the production value more so than just buying straight dirt and making the improvements themselves. Are you noticing this, Ted, a little bit? That's my question.
Yeah,
Thank you.
great question, Mike. Thank you. I am noticing that. I think, the productive dirt, the quality dirt, um, it is sort of trading at a premium still. Like it's not, I don't suspect it's going to be affected as much, right? It'll be the marginal stuff that'll probably get hit first. And I mean, just to change the topic a little bit, I mean, cattle prices are great, right? Like I think the ranch land is maybe even undervalued still. So there's different sectors. Like I said earlier, Dan, it follows the profits. So if the profits are really good on ranch land, that one is probably going to be climbing where grain land will be tapering off or, maybe doing a little dip here or something, right? But the productive stuff always trades quicker and easier. And another thing to add to that, Mike, the size of the package is makes a difference too. If you have like a 1 or 2 quarters, those seem to trade really well at good prices. And if you have a really big package, let's say 40, 50 quarters, those trade pretty well because there's a different group of buyers for those. And the ones that are in between, they're getting beat up a little bit because, most people can bid on 1 or 2 quarters, but not everyone can bid on 8 or 10 or 12. And so those middle-sized packages I'm noticing getting pulled back a bit as well as the marginal land.
Are you buying the dip, Michael?
Let me get on you. Yeah. No, we're not buying the dip. No, nope. We've bought previously, and made improvements and this and that. So we're just holding pat ourselves, Dano. So
You're sleeping good?
well, yeah. As good as any farmer can sleep, you bet. Yeah.
Okay, well,
Yeah.
we can.
But I did
Yeah.
meet a guy. I did meet a guy a year ago when we were visiting at some kind of conference in Regina. Tee hee hee.
Yeah.
But it did come to my mind that this particular gentleman sounded like he was more in the real estate business than he was in the business of production and growing crops. You know what I mean? The
Yeah.
target was real estate.
Yeah.
So maybe we're hitting a little reality that you still have to produce. You can't just buy and sell farmland all day long and go with that. So,
But
yeah.
are you not
Yeah.
in the business of producing to own the best real estate on planet Earth, according to
Yeah.
some? Yeah.
Got to produce.
And
Thanks, Dan.
Saskatchewan, best place on planet Earth too. Whew.
100%.
I mean, we're so full of blessings. Sometimes it's really hard to recognize that. And I want to get to that, Ted, too, on the final note, because you're a guy who can teach us a lot about perspective and happiness, and we shouldn't overlook that for all this conversation about farmland, be it as important as it is. But we had Romeo chiming in, no such thing as bad farmland, just bad operators. Sounds like a country song or license plate to me. Maybe you should IP that, Romeo. Georgina, what are you seeing on land rental rates and agreements? Is anything softening there or?
it's very area specific again, right? So I have seen in some of the areas that haven't had rain for quite a while, in the southwest, there's actually, I've heard of a few people that aren't even renewing rental agreements. So once again, those kind of follow profits as well. I'm like Georgina, I'm curious. I don't know where this is going to go. I think if people are short on capital, like, is that going to drive rental rates up, to keep the farm at scale, or are they going to drop off too? I mean, I'm not involved in rental agreements on most of my sales, but some of them I'm linked to them. And I think what I'm seeing on those is that they're just probably leveling out, and maybe even dropping a bit off those crazy peaks, because some areas had like really, like, sharp, if you're looking at a chart, right? Like really, so they're kind of coming off the top a little bit. But I'm not certain where it's going to land.
This is pretty fresh too, because when we first talked about doing this follow up, you said 2 weeks ago I wouldn't have said this, and I wouldn't have said that. But the elephant in the room, if you will, too, is the $1 billion of farmland that's come on the market, which you haven't technically addressed yet. I'm not sure if you want to touch that with a 10-foot pole. Uh, Obviously, it's had a big impact though on volumes, and I guess it's so public too that instantly changes the psychology and the sentiment where everybody takes a deep breath. Oh, something fundamental shifted here. Are you
I
wanting to comment on that or not
Yeah,
particularly?
absolutely. I think you nailed it on one of the pieces. It's a psychological thing where everyone's kind of like, something's happened here, right? And so psychologically, it starts to make the shift. And then also, just from an analytical perspective, I mean, that much land on the market is going to soak up a lot of the capital, right? We're already short on capital out there because the lenders are pulling back and margins have been squeezed. So we're short on capital, and that's going to, like a sponge, soak up a lot of the capital. So you can't not look at that. I mean, that's a big factor.
It is crazy how even in 2025, when Bitcoin is 120K, you've got to buy it before it goes to a million. Now it's 77, it's 70,000 and nobody wants it.
It's funny. I was watching a little. I'm a nerd for investing, and I was
Yeah.
watching Rick Rule talk about silver and stuff and gold last night, and he
Yeah.
was, like you're saying, Bitcoin at 70, no one wants it. He goes, well, when people hate it, I buy it, and when people love it, I sell it.
Honestly, beyond working off the farm and being a general all around, tall, handsome, smart guy, my dad always tried to buy land when see how I'm working myself into the inheritance as a non-farming sibling. That's my only lever is if dad likes me. That's all settled anyways, so it's whatever. But yeah, he always said too, he usually bought when other people were super, I guess, bearish as far as farmland went. Like the times that he bought was when nobody else kind of wanted it. Um, but it's one of those things when everybody else wants it, you feel like you're missing out on a really good deal. So we're getting close to the top of the hour. Two more things I want to cover, unless somebody else has got something to discuss. But first of all, Ted, if people have questions and they're not sure, I feel like you're the kind of guy. You're confidential, you're smart, you're capable, you got a lot of life experience, you got experience in business and you farm too. If people have questions, you can give them an assessment confidentially very quickly, I suppose, of what they should be doing or what their options are, right? If they are wanting to shuffle around some pieces on the chessboard. How do they get
Yeah,
a hold of you, or what does that look
never.
like?
Yeah, I mean, I can give people data and information. I never like to be so bold as to tell people what they should or shouldn't do with their own farmland. But I always welcome calls. I love talking to farm families and people. So, if you have questions about the marketplace or you're considering buying some land or selling some land, call me. I can tell you where I see the opportunities are for either of those, and how I could support you, or even just give you some general market knowledge. Like, this is what I'm seeing today.
How do people get a hold of you?
Um, uh, Ted at cawkwellgroup.com. Email, it's all on our website, cawkwellgroup.com. Yep, reach out. Phone numbers are all 306-986-7255. I'll respond to anything.
Yeah, maybe I'll just put that in the chat again. What was the phone number again?
306
Mhm.
986 7255. Now that's an office landline.
Oh,
So
wow. Old
that's not,
school.
yeah, oh yeah, I keep it old school here
Is
at the
that,
company.
what should we want me to put your fax number in there too?
No, I do not. I
You have
no.
magnetic tape rolling, once please leave a message at the tone. Um, the last thing I want you to talk about, because I think it's the most important thing at all, because farmland fortunes will go up and down, and you'll be rich and you'll be broke and you'll be, in love and maybe you fall out of love, or that's a different show. But uh, Ted, talk to me. You're a professional coach. You help people find their purpose and their passion and happiness, and you're just such a cheerful guy. It's highly inspiring. What to you constitutes happiness, and how should one pursue it in a free nation such as Canada/America, North America? How do we go about finding happiness according to a professional happiness person like you?
Well, I think we just we need to be grateful, number one, right, for what we have. And I think that attitude of gratitude is one of the biggest things we can do to be happy. I think a lot of people focus on what they don't have and not what they do have. And I know for me, it's kind of like exercising a muscle, right? If you want big biceps, you got to lift something heavy a bunch of times. And if you want to be happy, you have to exercise what's in here and what's in here. And there's a lot of different ways to do those exercises. I mean, I jumped out of the cold plunge before I came on this, and I, did my sauna last night, and I meditate, and was out snowmobiling in nature on the weekend, and it's different for all of us. But we need to find a way to be grateful, I think, in this crazy world, because there's a lot of stuff you can focus on that'll bring you down. But I try not to spend too much time thinking about those things.
Well, I really appreciate that about you. And I really appreciate all the 80 plus attendants that we had here today asking questions. And I wanted to get to Andy Keene's comment when I went on my little rant about what you can do if you want to get involved in agriculture. Andy Keene had said, well said, Dan. If you want it, go out and get it in this country. Work hard and smart, period. I think that hit home. We've all got the ability to chase our dreams. Michael Muscovy said ice fishing. Jeff Bennett said, I'm working my bank account like a muscle. It's not growing though. Wink, wink. Oh, Jeff. Oh, Jeffrey. Try a little gratitude in your attitude there, Jeffrey. Yeah, it's all good. Well, thank you. Jeff and I are working on something we're going to be revealing shortly to the world. We're very excited about it. But thanks everybody for coming on the call. Thanks so much for braving the webinar and these interesting times, and for sharing your candid thoughts on the internet. And don't stop. I think it's great. Authenticity is worth $1 million in this world. Devron says, thanks, Dan. Awesome to have you on, Ted. What did you think of your experience here today on Growing the Future Productions?
It was amazing. Like I live for this. Like I live and breathe farming and farmland and everything farm related. So anytime that I have an offer to talk to someone like yourself, I'm going to take it. I could have these conversations all day.
Absolutely. We're getting some applause here from Romeo, and Steve Raymond says, thanks for all the great info. Del Meyer says, refreshing. We're refreshing today, Ted. That's a great compliment. Ted is literally refreshed by hitting the cold plunge. I'm not sure if any of you jumped into the snowbank. Kelly Belargian says, thanks, Ted. Appreciate the insight. Hey, so that's means a lot to get your gratitude here today. And I don't know. I guess to sum it all up, like buy the dip, I guess is kind of the.
Well, do what's right for you. right? Like there's no magic bullet for like all farms should be buying farmland right now. All farms should be selling farmland right now, right? Like farms are so nuanced. And I think that's where some people they don't like certain things about the market, but it's like it might not fit for you, right? Like you might farm 500 acres or 5,000 acres or 50,000 acres. You might be fully levered or own everything outright. And everyone's situation is so different.
Georgina says, awesome. Thank you for putting yourself out there and sharing your insights. Andy Keene says, great stuff. We are rich beyond belief. Nothing to do with money most days. Amen. Well said, Andy. And yeah, we can move around the chairs on the Titanic all we want, but it's that inner work that makes it, you know, you probably do well on the Titanic because you're the cold plunge guy. You can swim, you know, to the next iceberg or whatever. I don't know. I'm just being facetious now, but prepare for it, folks. Okay, well, that was awesome. Thank you, Ted. I appreciate it. Great job. And yeah, we're going to continue the conversation in this vein on growing the future productions. And we are at Convergence Conference this week. Robert Angelica has been calling me and saying he's got all kinds of advice to share with the world. And Jeff Bennett's thinking of renaming his farm to Titanic Farm. I think that would be a first, tongue in cheek, but I like it. I can make you a logo, Jeff, if you really want to, and play the theme for you as well. All right, everybody. Thanks so much. Have a great Monday. We'll see you at Convergence Conference. Thanks, Ted. And yeah, we'll see you around the circuit.
Yeah, thanks, Dan. And thanks for everybody for joining and participating.
All right. Well, this recording is going to be on YouTube, and I'll send out an email to that regard. And thanks so much. Take care.
See ya.
Bye for now.